Hello and welcome to The Trade. Before we get into the charts, a quick look at what traders are watching, with US consumer confidence weakening to its lowest level since the start of the year in August, while new home sales plunged 10.5% in July as higher mortgage rates hit the US housing market. Meanwhile, Fed Chair Kevin Warsh's Jackson Hole keynote looms large, with markets watching closely for clues on the rate outlook. And helping to improve sentiment, US 10-year Treasury yields fell for a second day, the 10-year at 4.62%. Let's get into the technicals and see what the charts are telling us with Zoran Kresovicfrom from Blueberry Markets, who joins me now. Great to see you, Zoran. So the S&P 500 moving back here towards its record high. What's underpinning the rally in your view?
Yeah, definitely is. We're seeing a bit of a bearish tilt over the past few days, Juliet. And I mean, it's kind of normal from the record highs that we've seen over the past few weeks. And so, but I think the big news that came overnight was obviously Nvidia results, which obviously beat the market expectations, coming at around 99 billion for quarter two results. Earning estimates have actually, and forward guidance have are providing a bit of a backdrop on the AI sentiment and general consensus around semiconductor and AI stocks, which are actually to some extent arguably going in what's considered a bubble at the moment. But nevertheless, Nvidia has actually kind of pushed the 4% upside tilt after the market hours, and we're actually seeing somewhat that actually flood into the S&P 500 and also Nasdaq. I think the numbers that come out of the last over the past 24 hours when it comes to the actual inflation in the US and pushing the Treasury yields to the upside is also paving the way and providing a bit of a tilt towards the S&P 500, causing that support level around 7,600. So I think if you're looking at from the technical perspective, I'd be probably focusing first level of support around 7,600. I think a lot will have to do with the Jackson's Hole symposium, which is coming through on Friday night, and a little bit more clarity from Kevin Warsh, the Fed chair, in terms of the guidance, as market is actually pricing a fully 25 basis point interest rate hike by December 2026.
And Zoran, with that in mind, we're going to be very closely watching currency markets. But away from what the greenback might be doing, you're looking at the Aussie versus the yen. What is that telling us?
Yeah, I mean, earlier in the week, Julia, we've actually seen kind of some data coming out of Australia here, in particular July. CPI data, which obviously provided a bit of a backdrop on Aussie to gain a bit of momentum, because the inflation is actually sticky, especially on the core mean front year on year, than what kind of market was anticipating. And we are probably, unfortunately for the household owners, we are likely to actually get the interest rate hike at some point later in the year. Now, market is repricing around 33% that we will get that hike in the month of September, but and fully pricing another rate or the same rate hike by December. So I think on the back of that, I'm looking at kind of a longer term vision here, Juliet, on Aussie versus JPY, and we can actually see a sideways consolidation on the weekly chart for quite some time now. However, over the past 4 weeks, Aussie has actually gained quite a bit of momentum, hitting that level around 114.69. That provides a bit of a backdrop on the resistance level. Now, many investors and traders, especially here at Blueberry, are trying to take the advantage of that Aussie versus yen when it comes to a carry trade. However, they might be diminishing as we are anticipating Bank of Japan to potentially raise rates by 25 basis points and taking the base rate to around 1.25, 150. So the carry trade would be slightly squeezed if that is the case, but nevertheless, Aussie is still looking fairly bullish. I would like to see a level broken around that 115. If it does, then we could be going into the range 116, 117. Just a risk on the horizon for those that are actually looking for a short-term trade and short-term sentiment is the fact that Bank of Japan does seem to intervene at the awkward levels, especially on the charts. And if Aussie does actually continue heading higher, it's not to say the Bank of Japan may not intervene, which would obviously push Aussie lower and yen would gain some momentum. But right now we are in a sideways range, consolidation, as we like to call it in technical terms. And if we do break those levels around 115, then I wouldn't be discounting the level of 116, 117 in the near future.
And then, of course, with the outlook on gold, I was just talking about that amid the conflict in the Middle East still continuing. A structurally bullish outlook here?
Absolutely, I couldn't agree anymore. We've seen a long-term downtrend broken on that, Juliet, from around January up until 5th of August, when gold broke out of the range, and we saw such a bullish and strong momentum. Now, key headwinds and key drivers of that could be pointing to a number of things, including Fed intervention in the bond market and buying around 4 billion around of Treasury yields, doubling that from 2 billion a night, which is obviously trying to control the inflation and the narrative of long-term interest rates, and basically keeping a lid on top of that. Now, that obviously can work in a short term. It's a bit of a band-aid on a bullet wound, but in the long run, we've actually seen that kind of in history that hasn't worked when it comes to Bank of England back in 1992 and the Swiss franc collapse in 2015. So on the back of that, gold has been considered as a hedge. Gold has gained quite a lot of momentum. It's actually reached a 3-month high. We can see an uptrend line now clear. And we can actually see that level of 4,850 to 4,900 is a key resistance level. I'm not saying that it's not going to come back and retest some of that 4,450, 5,000. However, that's obviously considered as a 200-day simple moving average. Any levels around there are dips up to be bought probably. I do see anticipation of gold going a little bit higher, but I would be obviously tying in that very, very closely with what happens on Friday and Saturday with Kevin Warsh future dot plotting in terms of the interest rates in the US and kind of inflation that's actually starting to pick up. If Fed does come to conclusion they do need to raise rates and market is starting to price that, then we could see a bit of a breather in the gold and silver and commodities, and we could see a bit of a further pullback. But the cement or the key support level on gold is absolutely 4,000. The backdrop would be quite significant, but in the short term, I think 4,450 to 4,500 is a bit of a kind of a consolidation level, or breather for gold to actually gain momentum.
All right, Zoran, we'll leave it there. Thank you as always, Zoran Kresovicfrom Blueberry Markets. That does it for this edition of The Trade.